All right, Range Theory Trader back with you with another video, just going over the London trade of the day. And glad I'm going over this too because this one is coming all the way back. So I'm glad I didn't hold on to it. But this one was a 951 or a 1700. I'm sorry, 9 a.m., 5 p.m., 1 a.m. Okay, London session trade. So, well, some of Asia, some of London, either way, but mainly 1 a.m. That's when trading started. All right, so this right here is what's called a false breakout, which means, let me make this bigger. I just stick with 3 candle patterns to the best of my ability. And I like the fact that there were two preceding candles, two preceding small candles here, because I always figure that small candles lead to big ones. But when I see a range high right here and price does not, I know this looks big, but this green close was only 9 pips above the prior high. So if it's less than 10 or less pips, seems like 10 pips really keeps popping up here. But when it comes to the wick size of the candle and as well the close above the prior high, if this closes 10 or less pips above the prior candle's high, I look for a reversal. Okay, I look for a distribution candle or an expansion candle opposite of what just happened. Okay, I hope that makes sense. All right, so we want to ignore this green candle here because obviously this happened in the 1 a.m. candle. But remember that, yeah, typically you're in for one candle and you're out. So we're going to go down to the 5-minute chart and we're going to bring up our London template. Okay, so that's up, and there we go. Okay, I only trade 1 hour, the first hour of the chart. Okay, now here's the thing though, I missed it. Okay, I was asleep. Sue me. All right, so I got in late. I got in at 3:20. That's where I marked my entry here. So remember, our focus is just that we don't care. Once we identify a possible, candle range, we don't care about the rest of the chart. That we get caught up in. We're only trading one candle. Okay, we specialize in one candle and one candle only. So I'm only interested in price action from 1 a.m. to 9 a.m. All right. So I was late to the party. Why did I get in? I think I saw a fair value gap. Because number one though, obviously this was the wick. Okay, this line here was the open price, the 1 a.m. open price, and when I measured the open price up to the high, that was right at 10 pips. So that qualifies in my book as a distribution candle because typically I want to see a small wick and the majority of that candle going in the direction that I believe it's going to go into. Okay, so even though it was above the candle range high, remember that I already told you why I wanted to go short on this pair. So let's see, fair value gap was right here, right there. Those, let me make this bigger so you can see it. Okay, so like I said, I was late to the party, and yeah, fair value gaps, and also the range. This would have been, in terms of entry models, this would have been a candle range high type deal. Because it was close enough to the range high where I believe that price would stay inside of it. So, but fair value gaps did help to show that there's momentum. I will say fair value gaps is probably my number one sign indication there's momentum that the trade could go in your direction. And if they start disappearing, that may be an early warning sign that price is going to go against you. But if they hold out, then that's always an awesome sign. So anyway, got in at 3:20 because, like I said, I was late to the party. I didn't have my alarm set. Entered here, and I stacked my entries right in these two candles right here between 3:20 and 3:25. So got in there, and like I said, I believe price would stay inside the range, and then it just went down. So that was great. I'm not sure. I don't remember when I got out. I just don't remember. I don't know. But price did hit the candle range theory low to the tick. Look at that. So that was a 36 pip drop. So, but remember though, you don't need a big move. Okay, all you need is decent stop losses. Like 30 pip, you can do good enough with 30 pips. If you do a 10 pip stop loss like that and take profit to the bottom of the range right there, that's good for 1 to 3.6 on multiple entries though, because my entries are stacked because I keep things in a tight compressed window. Okay. So imagine getting, like, we'll just round up, say 1 to 4 just to make it simple. So let's say you're risking $10 to make $40. All right, 1 to 4. So that, and you have like 5 entries though. All right. So that's 40, another 40, that's 80, another 40, that's 120, another 40, that's 160, another 40, that'll be 200. Okay. That's how I trade. Now, I'm not saying you have to trade like that. If you just want to take one trade here and risk, like $50 to try to make what, five times $50 to try to make 200. That's fine too. But I start with a small risk so that if price goes against me immediately, then I just go ahead and get out. But I start with a little bit of risk first, and then as price goes in my position, goes in my favor, then I start to add and add and add, still looking for straight price action, because remember, we are distribution candle specialists. Okay. So remember though, I would not hold past the 8 hour candle, because as we see, price did come all the way back up. It did come back to our entry. Okay. Price, as much as we wish we could predict it, we cannot. We don't know what the market's going to do. We just react to what we see. And all I was looking for was one red candle. And there it was. So I capitalized on it, and then I go on about my business, and that's it. Okay. So that was the London session trade for the day. Aussie yen short. I think I got like 75% return for my on my account, which was good. Made a little withdrawal off of some of that, and then we just keep going. So, but that was the trade of the day. Appreciate you watching, and have a great rest of your day. Take care.